Hey everybody, and welcome back to Pardon the Price Action. I am JC Parets. I am joined by Steve Strazza. Let's get right into it. First topic, we've been talking a lot about the failed moves and the whipsaws since last month. They keep coming in both directions. What do you think about the recent failed breakout in small cap growth? False start or failed breakout?
Well, it's got to be one of the two, right? So we saw basically, we had something to get excited about for the first time all year, pretty much, for looking down the cap scale last week. Small cap growth, small cap tech. We look at IJT for small cap growth and PSCT for small cap tech. And they both broke out, but boy, was it a weak breakout. And now they're back below those former highs. And it looks a lot like it, could be a failed breakdown, but it's been ripping on that level and testing that level so many times. I feel like there's high likelihood it could be a false start also. What do you think?
Yep. Small caps have just been, underperforming forever. We finally may have gotten a breakout in the tech industry group and sector within small caps, but even that failed. So messy for longer remains the mantra.
And we've talked about whipsaws before on the show, right? And failed moves, and how last time we talked about them, they were happening from the downside, and we were seeing failed breakdowns.
Didn't you hear the whistle? China, baby. Let's hear it.
All right. So another thing we also talked about recently was how sentiment for Chinese stocks has been in the dumps, right? And it looked like they were at a logical level to start outperforming and turn things around. It's not even a month later, and the Shanghai Composite is now pressing on fresh 6-year highs. Last time we talked about it, we were near 8-9 month lows. So that changed. That happened fast. Kind of a big deal.
Yeah, I think so. I think the economists may have nailed it again. God bless. Really? They could not have been. Their timing is just impeccable. When we're looking at the one on the left, you're looking at a rainbow going into a trash bin, talking about emerging markets. And 2 weeks later, you got this. They're all stepping on all the Chinese tech stocks and internet names. Man, I think they absolutely nailed it. We're pushing up against new highs in the China Composite, both absolute and relative going in there. And I'll finish with the Chinese tech over Chinese internet. That's the leadership group.
Yeah.
Or lack of leadership. The less worse.
If the Shanghai Composite breaks out of that base, we're looking at about 30 to 40% of upside back to the former highs. What's the rest of the market probably doing?
It's probably not doing too poorly. All right, now speaking of not doing poorly, what is up with all of the shipping stocks? They've been outperforming industrials by a mile. Talk to me about the shippers.
How are more people not talking about this? So last week we came on and we were talking about this divergence in transports, right? Where large cap transports have been making lower highs and lower lows, but small and mid caps have been doing much better. So I looked into it this week. We looked under the hood a little bit. Shipping stocks are the leader over the trailing year-to-date basis, trailing quarter, trailing month, today, and the trailing week. They're just destroying it, right? So some quick stats. Over the trailing month, they're up 17%. Over the trailing quarter, they're also number one, up 12%. Not many industry groups are even positive over these time frames in industrials, right? Year-to-date, they're up over 100%. The next best group is up about 40%. So all of these stocks are small and mid caps. There are no large cap shippers. That's part of what's driving that divergence we talked about last week.
Yep, and that's the story for sure. It becomes quite obvious when you look at the components. They don't have any large cap marine shipping companies. They're all in smalls and mids, and look how well they're doing.
Yeah, they look great. The largest one I think is like $6 billion. That's Zim. So Young Aristocrats dropped this week. Did you like it? What was your favorite name?
I love the Young Aristocrats. Just to be clear, the Dividend Aristocrats are names that have raised their dividends every year for 25 consecutive years. And the Young Aristocrats, or as our boy Josh Brown likes to call them, the Lil Aristocrats, have raised their dividends every year for between 5 and 9 consecutive years. So we like to call them the Young Aristocrats or the Future Aristocrats. So they keep raising their dividends. The one I like is Exelon, EXC. We've seen relative strength out of utilities. Bonds still catching a bid. The yields, 10-year yields don't get above 1.4%. That's been good for utilities. EXC, Exelon, what do I like about it? Bigger the base, the higher in space, baby. What's there not to like? If we're above 50, 51, that puts us above all those highs. I like it long. I think you got 30% of upside.
Yeah, and like you said, that scan brings up a lot of different names. So we had a lot of high yielders this week because a lot of utilities hit our list because utilities have been strong, like you said. BCE is basically like the AT&T of Canada. That's on the list, huge yield. But we also had names like Abbott Labs, medical devices with smaller yields. So there's a little bit of something for everybody in that scan. I love it too.
Definitely. And don't you like it when like a name like Abbott Labs comes out on other scans and then it comes out on this scan? It's like, hello, maybe we should pay a little more attention to it.
That's when you really know, when they're popping up on the 2 to 100 and Young Aristocrats. Like, oh, damn.
All right, so let's talk about crypto targets. There's a lot of different ways to approach how you're going to set your targets. Why don't you give the folks a few options?
So Fibonacci has worked great on crypto. Bitcoin is a shining example. You could look at that Bitcoin chart from its 2017 rally. I mean, it stopped and paused and consolidated and, you know, respected those Fibonacci extension levels every step of the way during that rally. And it's done it again during the most recent bull market in crypto. So the question is here, how much do we want to give weight to these Fibonacci extension levels, right? Do we really want to just say, okay, hit the fib, let's take our profits off? Or do we kind of want to look at these things when they're trending the way they are and say, okay, it could blow right through. Maybe we don't give so much credence to it. It's hard because they've worked so well, right?
Yeah, you're alluding to Solana that has absolutely ignored any and all Fibonacci levels. You know, they've consolidated right at them, which makes sense, but then they rip through, really shows you the relative strength, which makes me want to reiterate that is what we're looking for. We're looking for relative strength. We're looking for the names that are above those May highs. And what's the target? You know, either you set these Fibonacci extension levels or you trade crypto as an asset class. And when Bitcoin gets back to those former highs, that's where you take those profits, you know, and just feed the ducks on all the altcoins. You know, I like either way. I'm more interested in how are you protecting your downside, right? Like anything else.
Yeah, no, you're not wrong. And one last thing I'll say is it's not that Fibonacci is not working when price blows right through it. That's also information, right?
All right, first thought, let's go.
This is a game we like to play where we say the first word that comes to mind. Today's word is leadership.
And my word that comes to mind when I think of leadership is a lack thereof, right? Where's the leader? Are we going to say tech? Are we going to say growth with that small cap breakout? Is the leadership group going to be uranium? Like, is there a real leadership group? I'm waiting for those cyclicals to really break out. Financials, industrials, materials, even energy. Like, if those things can get going, chances are the market overall is doing well. Chances are we have a series of leaders. I think that the leadership group now, that mega cap growth has essentially become a defensive haven, right? It's another bond trade, as we like to say. So are you really going to call it a leadership group?
You make a great point. And this is a theme we've been harping on for a long time. We wrote about it at length in our Q3 playbook. We wrote about it yesterday in our intermarket post. There's just been a general lack of directional edge or relative edge in any of these ratios, right? So you could even say, yeah, tech is the leader if you had to pick one. But if you look at XLK SPY, it's gone straight sideways for a year now. So it hasn't been leading. It's been going sideways on a relative basis. So it's really hard to kind of pick out leadership on a more intermediate term. What I will say is when you really zoom out on these charts, it's still large caps, it's still the US over the world, and it's still growth over value. From a more structural perspective.
I see what you did there. Nice little segue for our 2-minute drill, which is global breadth versus US breadth. And I'll let you take it away. Let's start with the breadth thrusts that we saw in May in the United States, and it's been flatline ever since.
So we wrote a post last week about how global breadth looks better than it has all year, right? It really is coming together for international equities right now. At the same time, when we look at the US, new highs are absolutely muted. We're not seeing any support for these new highs at the index level from our internal indicators. At the same time, you could argue that we just had our final breadth thrust, and it shows up last in the 52-week high indicator because that's the longest term one. We saw short-term highs thrusting in June of last year, but it wasn't until I think April or May of this year that 52-week highs gave a breath thrust for the S&P 500. And if you look at that chart since, new highs have just been kind of flatlining. They're not terrible, but they're nothing special. New lows at the same time are non-existent. When you look globally, it's very different, right? So I think that's where the focus is. Maybe it's time for the US to kind of hand that baton off to international equities and let them drive this thing for a while.
Yep, frontier markets, new highs. I think they're up like, I don't know, 11 out of 14 months in a row. Look at Japan breaking out of a 25-year base. Argentina pushing up against those highs, which makes me want to take a look at a name like Mercado Libre, Meli. Look at Saudi Arabia making new highs. There's your tweet that we're about to get into in a minute. And just finish up with Ireland. Shout out Ireland and congratulations Limerick for winning the hurling championships this year. I don't normally root for Limerick. They keep winning. They've won 3 out of the last 4 championships there, Mr. Strazza.
It's weird that you know that, but Ireland is at new all-time highs. And one thing that I'd like to allude to that you just kind of pointed out without mentioning it is we're not just new highs from one region, like it was Europe in the beginning of the year. We're seeing it from emerging markets, Europe, Japan, whatever, the Pacific, Canada. They're everywhere, frontier markets. So it's very broad-based strength internationally, and I think that bodes really well for international equities.
All right, final word. I'll go first. And last week we talked about Coin Tracker. I was getting all crazy, wondering where all my wallets were and what was in each wallet and cryptocurrencies, and it's just a pain to organize. Coin Tracker was my solution. I love it. I think it's fantastic. They're not paying me for this, by the way. I generally do use it, and I just want to share with you. If you have similar frustrations and too many wallets, that's a great one. And then I'd also like to add on that point, right, which is why I brought it up, is that we want to have multiple brokers. I got asked today, and I get asked all the time, JC, what's the best broker to buy crypto? The truth is, for multiple reasons, you need a variety of them. First of all, for just diversification purposes, you should have different brokers. Same thing in the stock market. Like if you have a TD Ameritrade account, maybe have a Schwab, Robinhood, like have different accounts because they're going down all the time. Like they're always having bugs. They're always shutting down, and you don't want to get caught and not be able to make a trade or hedge yourself or whatever it is you want to do because you only have one account. So have multiple accounts in the stock market, have multiple accounts in futures, currencies, whatever it is, cryptocurrencies as well for the diversification of it. And you just need to have certain wallets to buy certain coins. So if you want to be able to buy the most amount, depending on what's trading where, you need a variety of wallets. So that's my recommendation for the day. What about you?
I thought that was a great take. I mean, crypto, you need it even more so because you don't have access to all the coins from just one exchange or one broker. But as any investor will learn, the time that these brokerages go down is during flash crashes. It's when you need them the most, right? So if your Fidelity or your Schwab account goes down, you can't go crying and say, oh, I lost money because my Schwab platform went down. No, you should be ready to open up Interactive Brokers and hedge yourself out there.
Is this my final word or yours?
I liked it a lot. I'm sorry. On Young Aristocrats, I would give me a stock any day that pays a well below market yield over one that pays a high yield. Do you agree with me?
Well, I do now because we've done the work and we've seen the math, and the highest yields, chances are you're probably not getting that. And the reasons the yield's so high is because the P, the one on the top of the numerator, has gotten killed. You can't penalize a company for paying a low yield because the price keeps going up. Like that's a good thing.
They're typically stocks that are growing at a faster rate, hiking their dividend at a faster rate, paying out a safer dividend with a lower payout ratio. And then the appreciation in these stocks over the years could just be incredible. And we've seen it so many times now that, I have a lot of friends and family members who love their dividend stocks. And I just wish that they would love dividend stocks that paid.
Show them the math. Show them the math.
I cannot. You can lead a horse.
You can't argue against the math.
Some people don't want to see the math.
All right, everybody. This is another episode of Pardon the Price Action. Thank you, Mr. Steve. See you all next week.
Peace.